Welcome to the Fintech Times News and Views podcast. Established in 2016, the Fintech Times is a global multimedia news outlet centered around the world's first leading fintech newspaper. We report on the latest and brightest ideas from the fintech world. Follow the conversation using hashtag TFD News and Views and follow us at the Fintech Times. Hello, and welcome back to the Fintech Times News and Views podcast. I am here as ever with my lovely fellow hosts, Tom and Francis. How are you guys doing today?
Doing very, very well. It's good to be back. It's been quite a busy week. We have some busy weeks, some slow weeks when it comes to fintech news. And today, or this week, should I say, has been a pretty busy week. And yeah, we've got some exciting topics to delve into today as well.
Yeah, pretty much just to echo the exact same thing. It's been a very exciting week. I had a bit of time off at the start of the week, but I'm very excited to be here with you guys today. Should be an interesting episode.
Amazing stuff. So good to have you as per. But we are not alone this week. We have a guest, which is so very exciting. So I'm very thrilled to say that we have been joined by Ronan Donoghue, founder and managing director at Q4 Capital Advisors. Ronan, thank you so much for joining the podcast.
You're so welcome. It's good to be here.
Thank you. We're so excited to have you here. Hopefully we're all going to be on best behavior. Usually we kind of go a bit silly on this podcast. But why don't you give us a bit of an introduction as to just who you are and the kind of things that you do?
Sure. Well, Ronan Donoghue is my name. I'm based here in London. My career-wise, I've spent the last 25 years in the bond market here in London, focused on an interesting product called hybrid capital. If anyone's interested in that, Google it. If you can't sleep some night, it's a esoteric end of the bond market. It's a type of bond mostly issued by banks and insurance companies. Around about the pandemic time, I kind of changed my focus a bit and became a consultant. I set up Q4 really to come at the same issues, but from a different angle. So I set up as a consultant ostensibly to give advice on hybrid capital and related areas. But my first client, interestingly, turned out to be the European Commission, who wanted me to take my banking skill set and reapply it to the world of philanthropy. So I suddenly realized that the skill set you learn in the markets can be applied in a whole range of areas away from the markets. But to be effective, I had to do a deep dive into the world of fintech and AI because that's where everything's going. And so I did a lot of courses, professional development. I really kind of steeped myself in it. And I now more formally give advice really on the intersection of capital markets and AI. And no two jobs are the same. So it takes me in a lot of different directions. But the common theme is something to do with the markets and AI.
Amazing stuff. Well, it's so great to have you here. And I know you've brought an article along for us to discuss a little bit later. But first off, we are going to be talking very quickly our first piece today, which is about copycat banking. So I will very quickly give you a rundown. So essentially, Consumer Champion, which has found that over 2,000 copycat banking sites were reported in 2023. With these copycat websites masquerading as real banks, hoping to trick unsuspecting consumers into sending money to scammers. So in response to this, Which has joined forces with the DNS Research Federation to find out just how widespread the issue is. And by the sounds of it, it's pretty widespread. So these Which and DNSRF have been checking industry block lists and listing websites that have been reported to have hosted illegal content and that found over 2,000 URLs contained UK bank brands. So some of these affected banks were Barclays, HSBC, Halifax, Lloyds, Monzo, Nationwide, some really, really big names. And this is something, I don't know about you guys, obviously I'll open up the floor for you guys to join the discussion in a second. This is something that I had never really heard of. Like, maybe that's me being naive. But of course, scammers do be scammers, and they are very much trying to get you in any way that they possibly can. And it's kind of quite scary to know that they're doing it in such a way, using such big trusted names in the banking industry, like, the big banking brands, just trying to lead customers astray. I think obviously we all know about phishing and things like that, but actually having websites seems like a really intense way to try and get people to send money and lose their money. So that's quite horrifying, really. But I mean, I'd love to bring you guys into discussion, of course. So Tom, what did you think of this one? We'll go to you first.
Yeah, well, when I was sort of looking into the topic, I thought it was so concerning, really, that thousands of these types of copycat websites are popping up. some of them are literally live for a matter of days or hours, and which is basically calling for domain registrars to be doing a lot more to stop scammers from setting up these fraudulent websites in the first place, and saying they basically have a duty to protect consumers. And in many cases, the domains that these fraudsters use are like one letter out from the original one used by banks. Instead of NatWest Group, you'd have natvestgroup.com. It can be something really similar, or one letter out if you've had a typo when you're typing it in, or you've clicked a link that looks really similar at first glance. It's actually quite easy to fall victim to these. And it does really feel like these domain registrars have a big role to play in stopping fraudsters being able to access them in the first place. And it's one of the things that which has suggested, you can read in the article, is they've suggested that consumers use lookup services before you hand your information over to see when the domain was registered. If it was registered in the last 2 days, then it's realistically not going to be Barclays, the real Barclays or the real NatWest or whatever website you're on. And one thing that I thought, when I was looking into that, was something we speak about a lot on this podcast, is if someone's really confident in the steps that they took to get there in the first place, they're not really going to take a step back and go, okay, let me just double check I am right here and I'm on the right site. That's just human nature. If you're confident in what you've done, then you're going to be thinking, oh, this is the right website, I'll hand my information over. And we often see studies highlighting how even the most tech savvy people can fall victim to these types of scams, and in some cases they're actually more likely to fall victim to these types of fraud and scams because they're more confident in their own ability to spot it. So yeah, because of that, I think Witch's call was right in that it feels like the only real way to stop this happening is to try and stop it at the source. And in that case, hopefully the government can step in and try and force registrars to take more action.
It just goes to show you have to be so vigilant now with everything, even if, like you say, even if it looks so legit, that you get an email that looks so legit or a website looks so legit, you just have to double check. But I mean, like, Ronan, what do you think about this? Have you seen a lot of copycat banks and scams?
Yeah, I haven't actually myself, but I did find it a very worrying development, but maybe not so surprising. I think cyber criminals have been getting increasingly sophisticated in recent years, and they have access to all of the technological tools we do, but for different purposes. But looking into it also, myself, I realized, yes, legislation, what Fitch are calling for, is important, but so many of the domain registrars are not in the UK. They come in different legal formats. So some are connected to government departments, some are cooperatives, some are non-profit organizations, and others are connected to commercial entities, and they're in different parts of the world. So not all these scammers will be that will be using a Barclays domain, a fake domain site, will be registered in the UK. So I think legislating, it's important to do it, but I don't think it'll fully solve the problem. Um, as regards to looking up thing, very important, but I do worry that the whole basis of these scamming is to catch you unawares. Somebody's looking at their phone, they're busy. I don't know if I would have a lookup site to hand quickly to even know where to do it, because it's not something you do commonly. However, I was just thinking about it, and not to bring everything back to AI, but they point out that the dodgy sites they always have a dodgy domain. They misspell a few things. There's always a few giveaways. And whereas a busy person might not catch those, surely an AI bot could cast its eyes over a domain site and flash up an alert. And the example I would cite is for people, I'm sure you all transfer money through your banking systems. In the last, I'm going to say, 12 or 18 months, my bank at least, if I send money to a legitimate bank account in the name of, somebody I know, it will seek to match those things, and then it'll flash up, yes, they match. Now, whatever that technology is, surely can be reapplied in some way. Maybe a government watchdog, or somebody there could, if those domains have to pass through a filter before they get to you of some kind, I think it would be a low bar for where tech is now to catch them and have a big red flash or something come up. I leave the details to the coders as to how you could do that. But I feel the solution is more likely to be. I mean, one of the things I'm very fond of saying is that the solution to so many tech problems can also come from tech. They just have to be incentivized to do it, and I'd be looking there along with the legislation.
Yeah, I think you're absolutely right. And I think, like you say, sometimes it just feels like such an easy fix that you can help try and implement these things. But I mean, like Francis, what did you think of this one? Anything to add?
Yeah, absolutely. But firstly, I wanted to just say that I massively agree with Ronan there that it's not even in terms of fraud, really, but just in terms of consumer awareness and confidence. When you have that confirmation screen sort of pop up and say, this is the right person,
Mm-hmm.
and so on, it makes me, at least when I've been making bank transactions before, I've always been a little bit cautious about, oh, have I put in the right details?
Yeah.
Have I done this right, or is it wrong? But when you see that come up and it says this matches, it makes me think, oh, I don't need to go back and check again.
Mm-hmm.
And just in that term of sort of consumer confidence, I think it's really, really good. But sort of back on the topic, I remember in the early days, or I say the early days, when I was younger, and I'd get sort of like an email in, or I'd see a site somewhere, a financial institution. When you'd see the URLs, they'd normally be a jumble of letters and numbers, and they wouldn't really make any sense. And it was kind of a telltale sign. I mean, generally speaking, you know, that was the easier way to spot it. And I think at the time, fraudsters and scammers probably weren't so, I want to say, technologically advanced, perhaps, to get the more believable domains. And growing up, I never had PayPal either, and I'd always get sort of, again, emails and scams and stuff saying that my account had been compromised. But I mean, I didn't have it, and it looked real, it looked legit. But if I didn't have it, and if that had come from my primary bank account, then I'd probably have even believed it in some instances because they did look so real. And again, I know we're talking about URLs here, but in terms of the emails that you'd get, it would always be one letter out. It'd be, instead of like Barclays, it'd be Barclay or something like that. And I think if you're expecting something from a firm, it's even easier to fall victim to them. And I think a lot of the time, I don't want to say they do their research, but they do seem to send things at oddly specific times. Like if you're waiting for sort of a credit claim or anything like that, then you might get something from an insurance company sort of claiming to, or somebody claiming to be an insurance company. And I thought as well, what was really interesting in the article is that it said only, well, 2 to 3% of the respondents had fallen victim or thought they could have fallen victim. But that's still 2 or 3% of people who could have large amounts of money stolen. And I think firms have a duty to ensure that that number is zero. And if the firms themselves can't help them, then that's where the government must step in, which is what the article addresses at the very end. And I think government intervention is definitely needed because if financial institutions can only do so much against copycats, I think, and then it really does become if it's not, it's not only on firms to ensure there's consumer duty. Therefore, I think it then becomes part of the government's consumer duty to ensure they are protected.
Yeah, you're absolutely right. I think all of you have raised some really valid points here, and it's just another thing that I think you have to think about when you're sort of going in a financial space. You're trying to make a transaction or you're trying to do something with your bank. It's just everyone has to be so vigilant now. There is no room for complacency, even when you think you're safe. You have to double check. So it'd be interesting to see if anything comes out of it in the next few weeks, months, years, whatever. But anyway, let's move on then to your article, Ronan, that you've brought with us today. Do you want to give us a quick rundown as to what it is and maybe why you picked it as well?
Okay, sure. Well, the title of the article is How Blockchain Technology is Impacting Insurance Processes. Just for your listeners, I'm doing this wonderful hybrid capital bonds over the years. Insurance companies also issue it. It was maybe mostly banks, but I spent a lot of time working with insurance companies. But I come at this one a little bit more from the perspective as a consumer, because what basically the article is saying is that, and tell me if I need to kind of do a précis on what blockchain is, but it's saying that insurance companies could move their systems and processes onto a blockchain or distributed ledger of some kind. And they would basically cut down on fraud, they would cut down on cost, and most importantly, they would build trust with consumers. Because insurance has a real problem. I think we take out insurance and we're always a little unsure if when we go to claim, there won't be some box that wasn't ticked, or there'll be something that where you kind of trip over the terms and conditions and so on. And within the article, there was an example cited of how this could. There was actually a startup company giving people a peer-to-peer startup company that gives people take out insurance for travel, and if the plane is delayed, it automatically pays out. They check directly with a reliable airline checking source, and the blockchain, the bot, so to speak, would review the terms and conditions of the contract there and then, and if a payment was due, it would just send it to your bank account. So it's a way to streamline the whole process rather than going through brokers and going through a whole. For anyone who's telephoned an insurance company lately to claim on anything, it's a unpleasant experience and it takes a long time. And they may not pay. So I just think it's a really interesting one. But as with all of the use cases for blockchain and distributed ledgers, um, this is one that caught my eye because I've both insurance companies have been my client, but I've also been on the wrong side of a claim and had the headache of it all. And I'd certainly would be happy to see their business moving on to a more streamlined platform. That's essentially the story. The whole idea of blockchain, for anyone who's not so familiar with that, it's really, we hear a lot about Bitcoin and crypto, and they were the first users of distributed ledgers. But the more I look at it in my job and everywhere, the really exciting applications are not coming from cryptocurrency. To my way of thinking, they're coming from streamlining processes in insurance, in trade, in uh, property deeds on land registries, your driver's license, your passport. There's so many things that require. All of these things require a central authority to give you a passport or to give you a driver's license or to give you a title deed. But they could be they could be moved onto a platform just more secure, and there would be an immutable record that you own that house and that this is your driver's license and you hold this passport and so on. And so I just think the whole article is saying insurance is ripe for this. There's a few naysayers, but it's a cautious industry, and I expect them to be slow moving on this, but I expect them to get there eventually. So yeah, that's the essence of it. I don't know what you guys thought of it.
It's a really interesting topic, I think, and especially when you think of how traditional the insurance industry is as just like a singular example. I know it's always rife for disruption and innovation, and I think we hear that a lot at the Fintech Times, time and time again. People saying how insurance is just so ready to be, innovated. But I mean, Francis, what did you think on this when it comes to blockchain and insurance?
I think it's funny because when you think about blockchain, I think typically its lack of mainstream adoption in the sense that, everyone and anyone is using it. I mean, I know a lot of people are aware of it, a lot of people are in it because of crypto, but blockchain can really enable transparency. But again, it's almost ironic because of its lack of accessibility, I say in air quotes, it therefore it can't be transparent. I think it's ironic. But sort of on the topic, I love what Mustafa Melhelm, the business development manager for insurance and compliance firm EastNet, said, as it really highlights the potential of blockchain and sort of how it can simplify the insurance process. Is kind of like what Ronan was just saying, that it can sort of cut costs and really just enhance clarity, which I think is always an absolute must in an industry like the insurance one. And again, like Ronan was saying, when you think about different applications of blockchain, the one that I remember, obviously, as a Brazilian, in case anyone didn't know, but in the 2022 Brazilian presidential race, Lula was using blockchain as a way to ensure his legislation was not tampered with, because a lot of people were trying to say, oh, this isn't what he's actually promising. This is it. This is that. And there was a lot of confusion, but he was using blockchain to sort of say, no, this is the untampered, the original version. And this is what my sort of, if I'm elected, this is what I'll do. And I think it's a great industry like insurance that can have sort of back and forths. And, when you're trying to work out the truth or potential wait times, or like, again, like Ronan said, like there's a lot of check boxes that sometimes you can think that you've missed, or perhaps there's an updated policy that, for example, you're not aware of. Going back to a blockchain, everything is in one place. Everything is very clear and updated, and it's just a chronological path for someone to see, oh, this is what I thought it was, but that was 2 months ago. Now this is what the actual policy is. And I think in turn that just creates a greater customer experience. And again, good customer experience and increases loyalty, and that's what organizations want.
Yeah, you're so right. And I think there's so many uses of blockchain. It's probably used in a lot of places already that we don't even necessarily know about or need to know about. I do think it's interesting from the consumer standpoint of, I think a lot of people just don't know what it is. And I think it does get a bit of a bad rep, I think, for its association, like you're saying, with the crypto and Bitcoin and all the rest, which is really interesting. But I mean, Tom, what do you think about this? Are we going to see more of it in insurance?
It definitely seems like it. I mean, looking at the sort of various insights from the experts in the article, like you guys were saying, it seems like the potential is there for it to be transformative across sort of all aspects of insurance. You know, whether it be reducing fraud or smart contracts, simplifying the claims process, reducing disputes, and therefore building trust. It feels like sort of along the whole chain, there is a positive that blockchain can bring, and there are benefits for insurance firms and consumers alike when implementing this technology into it. But I find it interesting that how Rona said there are the naysayers in the insurance world, and like you saying, it's a very traditional space, and I think that's something we often talk about on this podcast is our gripe with just how slow implementation of new technology and innovation can be, whether it be in insurance or payments or another fintech subsector. And it's almost like the potential benefits are obvious, and we have all these experts detailing that the positives that could come from it, and yet it could be such a long time before we actually see widespread implementation of blockchain technology. Albeit there are still challenges that need to be overcome, there are costs that need to be addressed. But yeah, it just feels like once again it's another case of it could be a very, very long time before, as consumers, we actually start to experience the real benefits, even though there is a potential for it to be happening fairly soon.
Polly, no, I'll just add a few remarks. I agree with what Tom and Francis were saying. I mean, particularly the point about the Brazilian election. I think there's so many use cases. Let me firstly just address the one about timing, because I get this all the time also from clients and from stakeholders I deal with. And I deliberately, last summer, I went to the College of Europe and spent a few days doing a deep dive into the Digital Markets Act of all things. The reason I did that is because, you know, when I'm dealing with entrepreneurs, and particularly in the US, there's just this incredible energy pushing forward, and it's really impressive. And there's so many startups, so many cases, and it's just it's reasons to be optimistic. But yet, so many things are dragged back. Now, what it is really, it's the new world meeting the old world. You have, in my business in the bond market, unlike say Revolut, if I send you £10 on Revolut or something, you'll have it in immediately, I think, more or less. If you raise money in the bond market, it takes about 3 days for that money to hit your account. Now that's a long, long time, given the sums of money that are hundreds of millions, not billions, that change hands. And there's been talk for years. It's called T+3 is the delivery date. Trade date plus 3 days is when you get it. And everyone's talking about moving to T+0, which is, these huge sums of money would change hands exactly like you would have on a consumer banking app. But there are many problems holding it up. But one of them, which I discovered when I went to Brussels and I talked to the Capital Markets Union Director General over there, and they were telling me that there's a different body of legislation for trading and for settlement, two parts of it. And not only do you technologically have to bring these things together, but you somehow have to smash these two pieces of legislation together or rewrite it from the start. And every ecosystem I go into has something like this there. There's also antitrust is becoming a thing. There's also like the Digital Markets Act is trying to make these ecosystems more competitive, and it's watching the big dominant players whom we all know, Apple and the rest. And so I see almost like this parachute to a fast-moving car, just slowing it down. I think we'll get there. I think all of these things will come to pass, but they'll start with a lot of excitement, and then they'll be slowed down by colliding with reality on good old-fashioned things like regulation, tax, accounting, law, and so on. But the direction of travel is set. I do think blockchain will play a a huge blockchain or equivalent distributed ledger technology will play a huge role in industry and commerce going forward. But I couldn't put a date on it because that gets me to things that are out of my control completely. So positive outlook.
Yeah, we love that. We love a positive outlet. There's nothing better than that. But thank you so much, Ren, and thank you so much for bringing that article. It's really interesting, and bringing your insights as well. Why don't we move on then, guys, to our quick fire questions? Obviously, we just had a discussion, so if you want to hear any more of anything we've talked about today, head on over to thefintechtimes.com, where you can read plenty more news and insights over there. But of course, we have a wonderful guest here in Ronan, and when we have guests, we just love to get them to know them a little bit better and grill them both on fintech and on a few silly things as well. So, Ronan, are you ready for your quickfire question round?
I probably not, but I'll give it a go.
Amazing. Well, Tom, take it away.
Well, obviously, at the Fintech Times, one of the areas we're often talking about is pay tech. And one thing we want to know is, if you had one way to make a payment for the rest of your life, which way would you choose?
Well, it sounds like a bit of a fudge, but embedded finance is the thing that's interesting me most. That is, I came here in a ride-hailing car, without mentioning brand names, and I love the fact I can just get out of the car. I don't have to shuffle for my wallet, find money for a tip. I can do that later. And this is, I want to be able to drive into a car park and drive back out without having to find the pay kiosk and all of those things. And I think this is happening more and more and more. So yeah, embedded finance, I'd say, if it can all just be taken care of and my bank account is debited for everything I do, that would be nice.
It would make life a lot easier. I'm pretty sure
Wouldn't
you can
it?
do.
Yeah.
Can't you do that in some shops now? I'm sure I've read that somewhere.
No, it's all like embedded finance is not new. It's actually been going in a range of ways for years, but it's increasing and will become more dynamic and more secure and so on.
Absolutely. Well, the next question is arguably the most important one that we have here, and that is cats or dogs?
Dogs.
That is the correct answer. So
That
I'm
was
just glad
such a
that
quick
we got
answer as
there.
well.
Yeah, I'm glad it was the right one though, because dogs are absolutely
Do you have a
the
dog,
best.
Ronan?
No, I have a cat.
You have a
I
cat.
knew you'd ask me.
Controversial.
There we
That's
go.
so funny. Well, this is where I had a dog when I was growing up. I do love dogs, but I have a busy life in London. So does my wife, and cats don't need to be walked. So that is why we have a cat. But there is a lot of talk about a dog now with my kids. So if you get me back on your show at a later date, you might discover I actually have a dog. So we'll see.
Good. I look forward to that.
But yeah, I would love to have one,
Very
but
fair.
there are some realities I have to factor
One
in.
day there'll be a dog. Amazing. So back to fintech then. What is the most interesting thing that you have discovered about fintech recently? Could be absolutely anything at all.
I think it's, again, a slightly general answer. It's how many entrepreneurs are working below the waterline. I keep bumping into people who are involved in credible startup companies. They're in groups of people investigating things. You don't hear about them because they're at a much earlier stage of development. They may or may not need funding. They may or may not get funding. Their ideas may change. Very commonly, their ideas pivot. They start out doing something and they go to another. But I hadn't really appreciated how many the amount of economic activity that is taking place below the waterline. It's only when they pop their heads up at a launch of some kind that you hear about the new thing. But there's a very vibrant tech ecosystem in the UK that I must shamefully admit I didn't know about until quite recently. So that was a surprise to me.
And we'll take another little tangent now. And this is also a pretty important question. What would your superpower be if you were a superhero?
Oh my goodness. You know, I think you could make a very effective superhero and do good things for the public if you had an access all areas government pass. I'd love to be able to walk into the cabinet room unannounced and just sit there taking notes, or go into any government room, the Oval Office, wherever, and find out what's really going on. Just to listen to the raw, unedited, unmediated conversations that take place. And I appreciate, as an unelected representative, the superhero should not be able to say anything, but I would like to think you could grimace and, raise your eyebrows and, kind of send them a message that you're not really going to do that. Seriously? No, but I do think I've another. I talk a lot about what social media and what populist culture has done to governance, and I think it's really bad. And I've thoughts on how we can fix that, but I think that will be a way to really help the public. You would be definitely a hero if you could report back on what's going on there.
That's such a practical and well thought out answer. Whereas I was like, oh, I'd like to fly.
Yeah, well, I thought flying would be fun, but I don't know. I think you could get bored after a while. Whereas I don't think you could ever get bored just knocking on
Being
the
in the
door
room where it
quietly and saying it's only
happens.
me.
I feel like you could easily become a
Oh, so
supervillain though.
true.
Very
So
Well,
true.
quickly.
that's the flip
All it
side.
takes
You'd
is
have to,
one wrong thing
yes,
and then
yeah,
supervillain straight
you'd
away.
have to sign a code of conduct with yourself. Yeah, definitely.
Going back to fintech now, what are your go-to fintech products? I mean, as you said, sort of like embedded finance is massively helpful, but what are your go-to fintech products that you use in your everyday life?
I don't use so many. I mean, the one I will Revolut I use every day because I hadn't realized. I initially was overthinking it because being a bank capital expert, they weren't initially at least a bank, and they weren't regulated in the UK. And I was thinking, then I realized you don't have to put all your savings in; you just put in what you're comfortable with. And now I have my kids set up on it, and I can see how much they're spending. I can give them their pocket money through it. And the reason I use it every day is because I tend to get a cash call from my kids for something or other every day. Now that they know I can press two keys, strokes, and send the money. So there's a downside, but I have to say it's one a lot of people use, but that's the one I use most. Outside of that, I'm still a little bit in the old world of having a bank account and a broker's account, and we're not all my financial arrangements are consolidated, but I'm moving towards that. um, but as to tech more generally, um, I would use ride hailing apps a lot, and I would use Airbnb a lot. But if you check back with me again, as I say, in a year, I have a feeling this is about to change. There's so much coming on stream.
That's the beauty about fintech. New things come up all the time, and it's great. So moving on, then, feeding into one of I know is your topics, but what is the most exciting thing happening in AI right now for you?
I, Again, it seems. I mean, there's so many things. I spend a lot of time working on things that are what we think is going to come to pass, intelligently imagining where things are going rather than things being here. But I hear an awful lot of debates about it getting rid of jobs and so on. Uh, I think this expression, sort of augmented working, is the most important thing. I heard a radio program only this week with doctors on wondering if GPs would be made redundant, and actually the conclusion was that whilst bots and AI could do, could do diagnostics very quickly on people and a whole range of things, it won't get rid of them. It just means they'll be able to see, it'll become more efficient. So if in wealth tech, for example, there's a lot of talk about robo investing and getting rid of these big wealth advisors in private banks with oak panel rooms that are paid a lot of money. I think the reality is there'll be less of them. They will keep their job, but their client book will go from, I don't know, 50 to 250 per person. And I think GP's waiting list potentially could be cut down because you might go through various diagnostic checks and then go for a final chat with the GP to take you through it all. And I think you could keep going in everything. So the whole idea of augmented working rather than displacement, I think, is exciting. And pick your ecosystem or industry that one thing is more exciting to one person than another. So most of the things I'm excited about aren't here yet, which is odd. That's why I can't give you a simple answer. But I think the direction of travel, as I said before, is interesting. And I think just more efficiency, everyone getting more out of their service providers because AI is running behind them, giving them a wind in their tail. So that's the thing that excites me most.
No, that's a good answer. That's a good answer. I like that.
And just to get a little insight into what the sort of entertainment you like, what's a film you could watch every day? I know you're interested in AI. Are we going to get an iRobot answer here, or
No, because I don't think there's any movie I could watch every day that wouldn't start to diminish if I watched it every day. I have a friend who could watch The Matrix every day, and does sometimes. Um, but I was thinking I'm a bit old fashioned in my movie tastes. I was thinking classics like Godfather Part One, something like that. I can settle in and watch. I could watch a bit of it every day. I just think it's mesmerizing. But anything every day, I don't know about that. I think Groundhog Day is not as exciting as it some people might think.
Watching the film Groundhog Day every day, that would be trippy.
I did think about that.
That would be so like apt as well.
There's something about it. You could watch
it
it
every day.
over and over. Yeah, be an interesting way to remind yourself how exciting your life is. That it's not just one other humdrum repeat.
I was going to say that's probably the key to insanity, right there.
Yeah,
doing the same thing every day, someone doing the same thing every day. But rounding out our quickfire questions, if you didn't work in this industry, what job or industry do you think you would work in?
Look, realistically, I started out in financial reporting. I worked for a Dow Jones company in New York. That was how I got into the bond market. And increasingly, I've been writing articles and so on. So I have a feeling I would have drifted into something closer to your world. I have a lot of respect for journalism and the whole, that whole ecosystem and how it's evolving. So that was what excited me in almost equal measure to what I ended up doing. So I have a feeling that's what I would have done. And how good or otherwise I'd have been, I have no idea. That's another day's work. But I'm doing a bit at the moment, printing some articles here and there. So maybe that gives you an indication.
Sounds good. Well, you said nice thing about journalists, so you can come again. We'll be
Great.
happy about that. But amazing. Well, that does bring us to the end of our quickfire question round. Thank you so much, Ronan, for indulging us in some of our silly questions.
Not at all.
But that also does bring us near to the end of our podcast as well. But finally, just quickly, we will dip into what I learned this week. So, Ronan, for your benefit, we each week learn so much being on the editorial team at the Fintech Times that we like to share some info and some things with our listeners. So, Francis, what have you learned this week?
So this week I was learning all about e-commerce payment trends and how local payment popularity has completely soared and is really overtaking traditional card payments. And research from Boku found that by volume, card payments will account for just 30% of e-commerce transactions in 2028, which is down from 41% in 2023. So I just thought it was an interesting decline of, if it ain't broke, don't fix it. Well, it's still being fixed, and here we go with the digital revolution, I suppose.
Amazing. Thank you, Francis. Tom, what have you learned this week?
This week, I saw a new study from Credit Spring, which revealed that 6.7 million young people across the UK still don't know that using buy now, pay later can lead them into debt. And this is just a stat that kind of blew my mind, that people still don't know about the potential risks involved.
Yeah, absolutely. That's crazy. And Ronan, we're putting you on the spot here, but have you learned anything this week interesting that you'd like to share?
Maybe not as interesting in Tom and Francis' observations, but I was sort of sitting up straight when I saw the Department of Justice in the US launching a case against Apple, principally to do with the monopoly power of their smartphones. It's one of those big cases that'll take years to sort out. It reminds me of similar case they went after Microsoft back in the 90s. But it chimes a bit because there isn't an equivalent in Europe. This Digital Markets Act, which has come into force this year, I believe, is designed to counter that. And there isn't an equivalent block of legislation in the US. And there is some lobbying. So it might give way to some big changes there, because there's no question that we have a handful of very dominant players that increasingly govern many aspects of our lives. So it's one to watch. But that was it, yeah.
Yeah, absolutely. Definitely something to keep an eye on. And then just quickly, what I learned this week is that 71% of Australians are concerned about society going cashless, which I thought was very interesting after what we spoke about last week about cashless and access to contactless and card payments. But that does bring us officially now to the end of this week's episode. A big thanks, as usual, to Tom and Francis. It's always a pleasure to have you. But Ronan, thank you so much for joining this week. It's been absolutely fantastic to have you here sharing your insights, and we hope we see you again soon.
Thank you so much. I really enjoyed it. Hopefully we'll see each other again. Yeah.
Amazing. Thanks so much, Ronan.
Bye-bye.
See you guys next week.
See you guys then.
Thanks for listening to the Fintech Times News and Views podcast. Don't miss next week's episode and continue the conversation using #TFT News and Views and follow us at the Fintech Times.